All right, guys, listen up. We have a lot to go over in this video. We're going to go over a bunch of companies that just reported earnings. We'll break down their charts, the stocks, the numbers, all that good stuff. So jam-packed video. But before we dive into it, don't forget to get your free money from Moomoo, the sponsor of today's video, guys. Use that link down below. Open up your account, fund it with at least $100, and you get 5 stocks right off the bat, each up to $2,000. And if you fund your account at least $1,000, you get 10 more stocks, totaling 15 stocks. And listen to this, guys, the best part of the promo. Fund it with at least $5,000. On top of those 15 stocks, you also get a free share of either Tesla stock or Expedia, which this is a no-brainer, guys. Use that link down below. The best promo out right now. And of course, that is an affiliate link. It helps out the channel. I appreciate you all as always. And with that being said, cheers. Let's dive right into the video. So right now we have the markets, well, not right now because the markets are closed, but all the indexes ended up going down on the day except for the Dow Jones, which we'll talk about why here in a couple of minutes. We had the Russell down 0.9% on the day, and we touched upon this in my last video. You guys probably saw, so I don't want to go too deep into all the indexes here. Excuse me, but we had the Russell, a quick brief overview, down 0.9%. The NASDAQ completely dropped the ball, down 2.3% because of course, Tesla and Netflix, which we'll also break down later in this video. We had SPY down 0.7%, and the Dow went up 0.5% thanks to Goldman Sachs and Johnson & Johnson, which we'll also break down, you guessed it, later in the video. So jam-packed video today, guys, as we had the VIX up 1.7% and the metals went down a pretty good amount, especially silver down 1.7%. We had gold down about 0.5%. So let's just dive right into it, guys, starting off here with Netflix. Let me pull it up and show you, ticker symbol NFLX. And this, mind you, along with a lot of other tech stocks, it needed to pull back. It needed to pull back. Same with Tesla. And in my opinion, they were just looking for a reason to sell off these individual tech stocks and the overall markets. And with Netflix, they got it, right? They got the reason. They missed on revenue, I believe, off the top of my head. I'm not sure if we'll be able to see it on the live news tab here, but I believe they did $8.19 billion of revenue, and don't ask how I remember this. I was just looking at it 30 minutes ago, and somehow I'm remembering this, but $8.19 billion versus the $8.30 billion, I believe. So they missed on revenue there by a little bit, so that's probably a big reason why the stock dropped, but I believe they did beat on EPS by a pretty good margin. I forget exactly what they did. Actually, no, it's right here. They did 329 EPS, which I believe the estimate was in the 280s. So they did beat nicely on EPS, but again, they missed on revenue. And poof, just like that, the stock went down, what did I say, 8.5%. And it looks like here from top to bottom, from 495 to where it closed, or actually, what was the low on the day? Let me see. It hit 430 in the pre-market, it looks like. So from 495 to 430, that was a total drop of more than 8.4%. That was a drop of 13%, guys. So Netflix got hit very aggressively. Same with Tesla. You guys probably saw I made a video on Tesla earlier today. Make sure to go check it out. Tesla's now right at the 180 SMA on the 4-hour chart, which needs to hold if you're a bull, right? And Netflix is in the same spot. It's right at the 180 SMA, which needs to hold if you're a bull. If this starts to break under 420, 410, 400, that's where things could really start to slip. And to be honest, guys, I'm not buying it that we're going to just dump and start crashing out of nowhere. There's no catalyst that came out that shows that, unless we get something out of left field over the next couple of days, weeks. I think we could potentially see a rally or maybe some sort of small bounce. I'm not saying it's going to go right to 500 again. It could, but I'm not saying that for sure. Obviously, nothing's guaranteed. But I'm saying maybe a little pop, maybe a little 1, 2, 3% move off that moving average, maybe a little bit of action. Totally possible on Netflix. So keep your eyes on that. We also had American Airlines recently report earnings. They were this morning, and their stock completely collapsed. And I mean, was that hard to predict? I mean, they ran so much into earnings. The technical setup heading into the report was a double top. I mean, you guys can see that's a textbook double top, right? And this is another stock that was probably looking for a reason to sell off, and today it went down over 6%. Big drop there for AAL. So let me see what they ended up doing, guys. Looks like they did adjusted EPS of $1.92, which beat the $1.58, so that's good. And they beat on sales as well, $14.1 billion versus the $13.74 billion expected. So they beat EPS and revenue. That means guidance must have been off. Let me see here. Full year EPS guidance to it looks like they raised their guidance. What? They raised it to $3 to $3.75 versus the $3.08 expected. So that's actually a big raise there in EPS guidance. So I'm not sure why it's selling off. And the reason is, or the thing is rather, with the stock market, guys, there doesn't have to be a reason. Stocks could sell off for no reason at all, and it just doesn't make sense. And you can make the argument maybe earnings weren't as good as expected. You know, the stock ran up way too much into earnings. Sure, it did. But they did double beat. They did raise their EPS guidance, and the stock still went down. Sometimes, guys, it doesn't have to make sense. It's the stock market. It's a market of buyers and sellers, which means, guys, anything could happen. Irrational prices are very possible, as we've learned from the past couple of years trading in the stock market here, what we went through in 2020, 2021, followed by the crash of 22, now the rebound of 2023. Anything is possible, guys. Stocks become irrational. They do weird things. It's just how it goes. So that's AAL. The next one that I want to go over, which is carrying the Dow to the green that it's in today, guys, that it went up 0.5% today. It's Johnson & Johnson. Look at this move, up $10 on the day, up 6%. Massive move on the stock, and actually it's way bigger than that. I mean, the stock hit a low of 155 in the pre-market, and it shot all the way to 170, guys. That was almost it almost hit 170. That was in the middle of the day, and that's a move of 9%. So let me pull up the live news tab and see what Johnson & Johnson ended up doing so I could show you guys here. It looks like they did adjusted EPS of $2.80 versus $2.62 expected, so that beat, and their sales beat as well, $25.53 billion versus $24.63 billion expected. So double beat there for Johnson & Johnson, very strong. And it looks like here guidance, they raised their 2023 adjusted operational sales growth view to 6 to 7% from 4.5 to 5.5%. That's great. So essentially they raised both full year sales and EPS guidance. And if that happens, guys, that is a recipe for a green move, a big move, and that's what we're seeing right now. And this was pretty beaten down heading into earnings. This stock was at 165 a couple weeks ago. It got down to about 155 into earnings, and the earnings were good. They raised guidance, EPS beat, revenue beat, and we're seeing that big breakout now on J&J. It's pretty much carrying the Dow to the promised land, at least for today, guys. I mean, who knows if that's going to last, but the Dow should thank Johnson & Johnson and Goldman Sachs. We have to give Goldman Sachs some credit where credit is due. Their stock went up over 3% today, and this looks like it's starting to break out on the 4-hour chart as well. So the next one that I want to go over is Abbott Laboratories, which went up 4% on the day. My goodness, guys, big move there for ABT. So they did EPS of $1.08 versus $1.05, so that beat, and their sales beat as well, $9.98 billion versus $9.70 billion expected. So double beat there, and they see full year adjusted EPS of $4.30 to about $4.50. All right, what's revenue looking like in terms of guidance? I'm not seeing anything here in terms of guidance, but on the chart, what we're noticing is we're getting to a pretty big resistance, guys, at 110 to about $115 a share. That's been a big sticking point, and look at what we're doing. We're actually making higher lows into that sticking point. So what are we going to do? Are we going to break 115 right here, or are we going to start getting rejected, maybe see a bit of a pullback before we start running back to 115 again? Either way, I'm watching Abbott ABT, and I'm going to set my alert now, might as well, at 115. Let me do that very quickly. Mark is at or above, and we'll see where it goes from there. The next one that I want to go over, guys, is Capital One, which it looks like it went down 2.5% on the day. They reported earnings in the morning, I believe, or was it actually no, after the bell. So they did 352 EPS, which beat the 322. That's good. And sales missed 9.01 billion versus 9.12 billion expected. So mixed bag there right off the bat for earnings when it comes to Capital One. And I'm not seeing anything on EPS guidance or revenue guidance or anything like that. And by the looks of it, the stock is pretty unchanged right now, at least after the bell. Let me see. Actually, it did fall a bit initially to about $111. Now it's rebounded up to about $115. So it has rebounded a little bit. But at this point, guys, Capital One is pretty much flat after beating, I forget now. They beat on both, right? Or they missed, no, they missed sales, but they beat on EPS by a good chunk. So yeah, Capital One looking pretty good. COF, actually, is the chart looking pretty good? Let's see here. Let me double check that. Yeah, it's actually looking pretty good. We just have to now push through 115.20. That's actually a big resistance for COF. So the next one is KeyBank, K-E-Y. Yeah, K-E-Y is the ticker, which you guys probably know is one of those banks that got slaughtered in March and in February as well. And now it's starting to rebound a little bit, but still, it's really still beating down. I mean, the stock was at $20. Now it's at $12. I mean, it is down a good amount. So they did EPS of 27 cents, which missed the 31 cents expected. That's not good. And they missed on sales. Oh, guys. Oh, my God. 1.59 billion versus 1.63 billion expected. So double miss there for KeyCorp, which is not good at all. Let me see what else here. I think did Zion's report? Wait a second. They might be tomorrow. Wait a second. Are they right now? Actually, they reported right now. Let me see what they did, guys. Their stock went up 10%. So they were this morning, or were they yesterday? I actually missed this one, guys. Looks like they did EPS of $1.11. That was in line. What was their revenue? I'm not seeing it, but it looks like here Zion's ended up reporting earnings yesterday. And did they get a buy rating? Oh my gosh, they did. Jefferies upgraded JP Morgan Chase, or that's not for. I read that wrong, guys. I thought it said Jefferies and JP Morgan Chase upgrade them, but no, it says Jefferies upgraded JP Morgan Chase. Then why the heck is it on Zion's live news tab? Either way, guys, probably because it's a bank. It makes sense. But yeah, those two reported, and their stocks are slowly starting to turn around. I mean, maybe we'll watch them. We'll keep it on the watch list. And the last one for the video, guys, is Philip Morris, ticker symbol PM. And by the way, if you guys stuck till the end, hit that like button. Make sure to subscribe. I appreciate you all as always. We're almost at 30,000 subs, and by the way, subscribing is completely free. Just hit that red button. It helps me out overall in the algorithm as well. You guys are awesome. So Philip Morris reported earnings. They're usually in the morning, right? Yeah, they were in the morning. Yeah, it looks like they did adjusted EPS of $1.60 versus $1.47, so that beat. And they beat on sales, $8.97 billion, so almost $9 billion for Philip Morris, guys, versus the $8.65. So they actually beat by a good chunk there. And of course, this is not a stock that maybe a lot of people out there own. I personally don't own it. I'm not going to lie. Full disclosure, I don't own it. But it's one of those that for sure is a dividend player. That's what it comes down to, guys. It comes down to if you're a dividend investor or not. And me personally, I'm not a big fan of dividends, especially if you're earlier in your investing career. You know, if you're in your 20s, 30s, 40s, even 50s, arguably. I'm not a big fan of just chasing high yield dividend stocks just because they have a high yield. You know, that's not the way I like to do it. I think the strategy, at least for me, is invest in, quality growth stocks, index funds as a younger person. Then if you want to start living off of, parts of your stock market portfolio, then you can go and maybe buy some dividend stocks, and maybe Philip Morris at that point could be a pick, no doubt. It could definitely be a pick. But right now, for me as a long-term investment, it doesn't make sense. But for sure, it's one worth looking at if you like dividends. I think at this point, what's their yield? It's got to be 5%. I mean, that's what it was last time I checked. Maybe it's even more than 5%. Let me see here, guys. Their dividend right now, 5.1%. I pretty much nailed that. I swear I haven't looked at that in probably a couple years at this point, but I just know it's one of those that's always in the 5 to 6 to 7% range. Same with Altria, which we're not going to get into in this video. So yeah, guys, that's pretty much it. If you enjoyed it, hit the like button. Make sure to subscribe. Again, it's free. We're almost at 30,000 subs. And don't forget to get your free money from Moomoo, up to 16 stocks, each up to $2,000. All you guys have to do is use that link down below, open up your account, fund it with at least $100. You get 5 stocks right off the bat, and fund your account at least $1,000. You get 10 more stocks, totaling 15 stocks. And listen to this, guys, fund your account at least $5,000 on top of those 15 stocks. You also get a free share of either Tesla stock or Expedia, which this promo is by far the best promo right now, guys. It is a no-brainer, so use that link down below. And of course, that is an affiliate link. I appreciate you all as always. And with that being said, cheers. I'll catch you later.